So let's kick off the session in talking a little bit about what we have learned from US SOX and what's the likely impact of UK SOX on internal controls reporting requirements. So Nigel, if you'd like to start.
Oh, sure. So I suppose there were many people were in the same situation that Adil was in, finding themselves responsible under this new legislation for signing off internal controls. And I think the reaction of many CEOs and CFOs back in the day were, what's an internal control? So like there really wasn't a controls consciousness that was very broad at that point in time. And so when it all sort of got started, I would say that I was honored that actually a lot of companies actually looked to their technology provider for like what do we do? How should we react to this? And I was fortunate enough to be an accountant by first profession. I'm an internal auditor and a few other auditing qualifications as well. So I felt that I had some at least some knowledge of what was going to happen in this space after having read through the legislation. But it looked as if it was going to impact like the financial reporting pieces. We really thought that was where it was going to start. But it's kind of interesting that the center of gravity of what was happening with internal controls reporting over that period sort of shifted around for a while. So I kind of started off in the sort of financial reporting spaces, but pretty quickly it kind of spread to the sort of document management area. People were very focused on documenting their controls and to develop sort of procedures manuals. That seemed to be where everyone sort of rushed to. And a lot of the dominant companies at that phase tended to come from more of a document management background. And then it kind of shifted more sort of formally from like a document to maybe more formally seeing what was happening in a workflow. So to be able to sort of certify that things were being done within a workflow, and some of the workflow tools sort of started to become dominant in the sort of second wave in those early days. And then it sort of shifted from the human aspects of like procedure manuals and like maybe workflow management to get kind of focused in on the IT controls. And so that became sort of dominant, I think, for a long time, like clearly because once you can take advantage of the controls that are already like baked into the ERP system, they tend to be much more predictable, much more reliable, harder to circumvent to some large degree, and certainly easier to certify, but is very broad. I mean, that space is actually very, very broad. So I think where it kind of finally came to rest was people taking more of a risk-based approach, that they had to actually find out like where were their risks and sort of drill down from a risk-based approach into the internal controls area. So that's the sort of journey that I saw. I was very fortunate that I had been thinking that something was likely to happen in that space in terms of automating the audit process. And so we did get a little bit of a head start at Oracle in sort of bringing out some of the first tools in that really in that space. And my enduring thanks to the SafePass gang is sort of making sure that all of my early customers there were well looked after.
Yeah, Nigel, that's an excellent point. I'll just add a couple of more observations to what you said that might be helpful to folks that are listening to us in UK. So absolutely, it was seen as a documentation problem, and frankly, it put a lot of burden on management and companies to go out and spend, I'll just say a ton of money on audit firms or internal audit firms. One of the byproducts of Enron blow up that resulted in Sarbanes-Oxley in the U.S. was, and a few others, was also that Arthur Andersen, which was one of the top audit firms, exploded, and so that evolved into this new organization called Protiviti, and a number of other organizations that basically specialized and built businesses around SOX. Some people called it SOX in a box, where you could go to these organizations and they'll come in and basically they would pull out their Word and Excel documents and take what was known at the time was a bottom approach. They would go around talking to various process owners and control owners and documenting the design of the control and then testing against that design and getting certification. So it was a huge amount of effort put in, and the burden was on businesses recognized by the governing bodies in the US, which is led by the SEC under the Congress guidelines for Sarbanes-Oxley. And so they actually came out with a clarification of that standard, and as you said correctly, take a more of a risk-based approach as opposed to what at the time was more of initially was a bottom approach. So as you move forward with the UK, I think the lessons that your audit firms have learned from the US market will be applicable, and hopefully, I know that there's not a prescribed framework like we had in US with the COSO framework being the standard for Audit Standard 2 and then Audit Standard 5 and onwards. But Audit Standard 2 was really not clear enough, so even the governing bodies through the PCAOB were not clear on how to do that, and that created a lot of chaos for us here. And obviously cost and not much, I would say some value, but not enough value. Where we saw the value is when AS5 comes out in 2006 to 2005, I don't know the exact time, but we saw a big shift in the US. People started to rationalize those controls to key controls and started looking at their financial statement risks that are tied to the actual impact of those risks on the balance sheet and income statement. And while we didn't have a clarity on how to do that analysis, but the analysis itself was important to take a look at the risk that's impacting your liabilities and assets, et cetera, and then look at that risk. And so I think that rationalization period is where we see a shift to what is now known as governance, risk, and compliance, because we needed automation, we needed software away from the Word documents and Visio charts and those risk and control matrices that were developed manually. So going from that manual certification of your controls effectiveness, what we call SOX 302 on a quarterly basis, an annual assessment of what's known as SOX 404. That shift we see happening as the lessons were learned in the US market, not only by the auditors and the auditees, but also the governing bodies in the US. And I think that's where you start seeing some value come up, where you're starting to have control owners and process owners really understand what they need to do. And we'll talk a little bit about how we get to the automated stage from there. But yeah, so those are a couple of things that I just wanted to highlight that will help hopefully folks that are starting this journey in the UK.
Would you like to add anything?
Yeah, I think so I spent my formative years at Big Four accounting firms. So having sat as both an implementer of SOX programs, but also as an auditor of organizations that are subject to US SOX, I think a couple of things that I noticed. One was around the evidence required to demonstrate that controls are operating effectively. So, I mean, there's always been a requirement that larger organizations will take a controls-based approach for their external audits, and this is supplemental. So this is about not just relying on the external auditors to do their work at the year end, plus any internal audit work that may or may not happen around financial systems and their processes. This is a requirement of management to perform at least quarterly testing to demonstrate that controls are still effective. And then they actually both designed effectively and operating effectively. And that kind of sat in two different buckets, one on management, but also one on the external auditors, to make sure that it has happened and the testing was of appropriate rigor. Now, that kind of latter bucket at the moment is a little bit unclear whether or not in the UK that will definitely be required from external auditors. It's quite impactful in terms of effort and value costs to audit fees at that point, but that's to be confirmed. That's one of the discussion topics at the moment.
Great, thanks for your insight.